On today's video, we're going to be talking about buildings insurance for residential investment properties, buy-to-let properties. So what you need to know and understand to be able to get buildings insurance that you need for your investment. Welcome back to Property Insight. My name is Neil Harding.
And I'm Mark Ashworth.
So, Mark, buildings insurance, all sorts of different things.
Subject.
Yeah, buildings insurance, exactly. So, all sorts of things that you're going to need to know in order for probably an insurance broker to go and find you a suitable policy to insure your buy-to-let property.
Sure, so I mean, let's just make this clear. You don't actually legally have to have any kind of insurance at all for a property. However, if you've got a mortgage on the property, then you will definitely 100% need insurance. So in buildings insurance and contents insurance is not a legal requirement, only it's a requirement by the bank.
That's a good point.
If you want to take the risk that your property may never burn down, or that might never fall down, or might not ever suffer from subsidence, or never get burgled, etc., 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 then you can take a view on that and decide if you own it in cash. But obviously, the insurance companies are going to want to mitigate against anything and everything in that property, so they're going to need to find out a lot about it. So one of the most common, or some of the most common things that they want to know is the building type, whether it's standard construction, whether it's what it's made out of, brick and block. They usually call it as a standard construction, or whether it's a timber frame. They'll want to know whether it's, particularly in light of recent events with the cladding issues, they'll want to know whether it's got any kind of cladding on it. They'll also want to know the ownership and make sure that the title is in your name. They'll want to know whether it's got multiple people in the property. So, for example, if it is a rental property, they'll want to know if it's a single let. They'll want to know if it's a HMO. If you're using it as serviced accommodation, they'll want to know that, because that has its own set of risks involved in that too. The other big one that's seen a massive amount of change over the last, let's say, 2 years, and this is purely down to inflation, is the reinstatement value. So for people who have got properties and have owned properties for a long time, it's well worth making sure that the reinstatement value is correct on your insurance, because if for any reason there's a discrepancy with that, the insurance company could basically say you're underinsured, we're not paying out, or we're only going to pay a percentage based on what your premium was originally insured for. So there's a website called, I think it's the bics.com, I think it is, where you can go in. I will put the link down below so you can get the exact link for that, where you can go in and you can put the details of the property, the number of rooms, the square meterage, I think, and a few other bits of criteria, and it will then give you a fairly arbitrary sort of figure which you can use as a reinstatement value for your insurance quotation, because they will want to know that when you get the quote. Whether it's occupied is another big one. So, does it have tenants in situ, or are you refurbishing it? Is it going to be empty for a period of time? And obviously, if you are doing a refurb on it, it's well worth telling the insurance company that it will be empty for a period. Likely with all these things, if you tell an insurance company one thing and you do something else, or you don't tell them, or there's an assumption, chances are you won't be insured. So you'd be paying for a premium that's basically null and void. Good example of this is if you've got an alarm system at home. So if you've got a burglar or intruder alarm system at home and you don't put it on and you get burgled, they won't pay out. A bit like locking all the doors, so if you've got a lock at the top and a lock at the bottom, and you've told the insurance company you've got a lock at the top and a lock at the bottom, and you go out and you pop to the co-op and you've only shut the door and you lock the one lock and the other locks weren't on, and that's discovered in a report by, I guess the police would probably give some kind of report as to what they found, again, they wouldn't pay out. So you have to be really, really careful about making sure that you do what you say you're going to do and tell them exactly the right information.
It's a really good point. I think, top tip, really make sure you read every word of the buildings insurance policy that you're looking to take out. Sometimes there are endorsements in there that can be the most bizarre things that you wouldn't expect. Like I've seen endorsements on policies where it says, if there's a tree within 10 meters of the property, then it must be pruned every 3 months, and you need to keep a log and be able to demonstrate I mean, I didn't take the policy because I just thought it was ridiculous because there wasn't a tree anyway, and I just thought, well, this is just nuts. So, but that's the sort of thing that can crop up.
Yeah.
This is an important point as well. You need to get buildings insurance from the date of exchange of contract when you're buying your property, not from the date of completion, because from the date of exchange of contract, that's when you are contractually obliged to actually purchase the property. And it just makes sense to then insure yourself against the risk of anything that might happen to that property. So another thing to look out for sometimes is on building insurance policies. Some policies will only be valid if you actually have legal title and you are the legal owner of the property, which is completion. So they're not always suitable. And Mark, like you said, insurance companies will more than happily take your money when you pay the policy premium, regardless of whether or not you're actually insured in reality. They're not going to sort of double check to make sure that you are really insured. They'll just take your money.
They're essentially basing that policy on information that they've told you. So if you've not been 100% clear about what you've actually signed up for, then they've got every opportunity to wriggle out of it. And you'll feel like they're wriggling out of it, but actually technically they're possibly right if they've not actually insured you correctly in the first place.
Really hope that you found that insightful. Please do comment, like and subscribe to the channel. We love to read your comments and we will respond to all of them, and look forward to seeing you next time. Thank you.